Welcome back to Stock Talk and Chill, your favorite podcast for dissecting the market with a side of laughs. I'm Leo, and with me, as always, is the man, the myth, the legend, Mark.
What's up, Stock Talkers? So glad to be back, feeling the energy, feeling the market, I guess. Hope everyone's having a fantastic week.
Absolutely. And speaking of fantastic, we've got a real hot topic today. Something that's been making waves, riding high, then maybe taking a little dip. We're diving deep into the fascinating world of Figma stock, ticker symbol FIG.
Ooh, Figma, everyone's favorite collaborative design tool. You know, the one where you can see all your colleagues' cursors flying around like a swarm of very productive digital bees.
Exactly. But we're not just talking about the app today. We're talking about its journey on Wall Street. And let me tell you, it's been quite a ride.
Yeah, talk about an entrance. Figma, NYSE, ticker symbol FIG, launched on Wall Street on July 31st, 2025. And guess what? Its stock price soared over 250% on its IPO day. From an opening price of $33, it closed at $115.50. That's seriously wild. For a deal raising over $500 million, that was the strongest first-day IPO surge in over 30 years.
Mind-blowing. It made their fully diluted market capitalization shoot up to around $67 to $68 billion, absolutely dwarfing Adobe's previously canceled acquisition offer of $20 billion. Clearly, the market had a lot more faith in Figma than Adobe did initially.
Definitely. So what made it such a hot commodity, Leo? What were the big pros that got investors so excited?
Great question, Mark. Let's get into the pros for Figma stock. Market dominance and growth. Analysts like Derek Hernandez from PitchBook called Figma a SaaS company of the era, with a near monopoly in the digital design tool market. It boasts rapid revenue growth and has penetrated large enterprise clients. They're used by 95% of Fortune 500 companies in 2024. Strategic adaptability. After the Adobe deal fell through in 2023 due to regulatory issues, Figma didn't just sit there. They shifted gears, focusing on innovation and expanding their product offerings, which is clearly paying off. Pivotal IPO in a recovering market. Figma's spectacular debut signaled a significant recovery in the tech IPO market, showing strong investor demand for fast-growing tech companies. It outperformed other recent tech IPOs with its massive 250% first-day return. Strong business fundamentals. The company was founded in 2012 and reported around $749 million in revenue in 2024, with Q1 2025 revenue at $228 million, growing 46% year over year and an impressive 92% gross margin. AI integration. Figma is actively incorporating AI, launching several AI products like Figma Sites, Figma Make, Figma Buzz, and Figma Draw at Config 2025, which enhances their design and prototyping capabilities. Broad user base. They have over 13 million monthly users, and a fascinating 2/3 of them are non-designers, highlighting its wide cross-functional appeal and strong network effects.
Wow, that's a compelling list of reasons to be bullish. It sounds like a runaway success story. But as we always say here at Stock Talk and Chill, there are two sides to every coin. What about the cons, Leo? Are there any red flags?
Oh, you know it, Mark. Even the brightest stars have their shadows. Here are some of the cons and risks for Figma stock. Sky-high valuation. The closing price of $115.50 on IPO day put Figma's market cap at $67.6 billion, which is literally 3 times Adobe's original offer. While the company is growing, analysts are asking if this valuation is too high, especially given its relatively young revenue base and still unstable profitability. They had a net loss in 2023, though they posted a net profit of $44.9 million in Q1 2025. High expectations. The current stock price already reflects extremely high expectations for sustained long-term growth. If that growth slows even slightly, the stock could see a significant downside. Insider selling. This is a big one. Major shareholders, including founders and early investors, sold millions of shares on or around the IPO, making hundreds of millions in profit. For example, Ventures VI Jersey LP Index sold over 3 million shares, and Greylock 14 GP LLC sold over 3 million shares. In the last 90 days, insiders sold a total of 19,617,451 shares, valued over $618 million, while only purchasing about $10 million worth. This raises questions about their long-term incentives. Post-lockup volatility. There's a risk of a sell-off after the lockup period ends, when more insiders or early investors become free to sell their shares. Competitive and regulatory scrutiny. Despite its dominance, Figma faces potential competition from big tech rivals and new AI-powered tools. Also, its market-leading position in design infrastructure could draw regulatory attention. Top analyst view. Interestingly, MarketBeat identified 5 stocks that top analysts were whispering to clients to buy, and Figma wasn't on that list. They have a moderate buy rating, but top-rated analysts prefer other stocks.
So it's a classic case of incredible potential balanced with some serious valuation concerns and the old-age question of, is it too expensive now? It seems like investors who jump in now are betting big on its AI future and continued rapid growth.
Exactly. It's for the long-term, patient investor who truly believes in Figma's vision, but they have to be ready for some volatility. There might even be better entry points down the line if there's a market correction or post-lockup selling.
Fascinating stuff, Leo. Figma's journey is definitely one to watch, especially how their AI products evolve and how they manage their profitability against that massive valuation.
Couldn't agree more. And that wraps up our deep dive into Figma stock today. Hopefully you've all gained some valuable insights, or at least a good couple or two.
Thanks for tuning in, everyone. We love having you here. If you enjoyed today's discussion, or even if you just enjoyed my dazzling wit, make sure to hit that like button, share this episode with your friends, and most importantly, subscribe to our YouTube channel so you don't miss out on any future Stock Talk and Chill episodes.
Until next time, keep investing smart, and we'll see you on the next one.